This is a potential short trade setup for GWW Grainger, component of the industrial distribution sector. And here we have this primary trend line off the May 2020 lows here. Plenty of reaction validated. We put in a pretty nice divergent high here. Negative and bearish divergences really on all three indicators. Crossovers on the MACD oscillator and a breakdown below its zero line here. We had this 200-day moving average actually closely synchronizing with that primary trend line here. And I truly believe a solid break below that 467 would enact a sell signal, especially a solid hourly and or 2-hour daily interval solid red candle close would put it in a sell signal, in my opinion, especially with the industrial distribution sector looking really vulnerable right now and taking some pretty big hits all across the board. Again, not a whole lot of open interest and or volume. GWW traders, long traders, investors, this is your dollar cost average pretty much map here, but again, maybe we never get it, and maybe we ended up of course it tagged it right here, whipsawed right back above and closed right back above that primary trend line. And for the bullish case scenario, you want to see it break, if you're going to dollar cost average, this is where you'd step in right now. And, you want to see a solid break above that 200-day moving average and a solid close above it to recover it. And maybe you start to see a little bit more buying. But, as for now, we'll see if we get that solid break and wait patiently for that 467 on the break below and see if anything develops after that. Zoom out here on the weekly interval here. And this is where I get some of these targets here, especially that things got real bad right there at that 291.03 price support. This is the weekly with, again, pretty damaged momentum indicators here on the weekly as well on a zoomed out future. Really off the 2000 era right here, primary trend line off the .com bubble burst here. And here we are, primary trend line even synchronizing with the 08-2009 financial crisis. Up to the 2017 tightening curve and right underneath that COVID crash as well. So, if we were to break that 467, take out that 50 weekly moving average, which is also coinciding with that primary trend line. So again, more evidence to vote for such a premier and pivotal and imperative inflection point. And again, you're talking about a huge, I mentioned 259, back to that bottom of that trend line for a 42% drop. But again, we got to break these key levels. If they're not broken, there's no reason to bail out on them and or set up any potential short contracts if there's ever any open interest and or volume that end up taking place. So, but these are your key levels. This is your key levels to watch, and if there's anything new, I'll keep you updated. Hit that like and subscribe button.